Have you ever wondered why some investors seem to have the returns that are above average in the market, while other investors seem to, even in an up market, struggle? The answer is that you're focusing on the wrong markets. You see, the data center market, the AI market, is one of the fastest growing markets in the world. There's other ones we've been covering recently, including quantum, AI, space, and definitely in the energy sector as well as the mineral sector. But one of the top individual markets in the stock market is going to be the data center market. And then inside each of these markets, there's also individual markets that perform at higher returns than others. And I call these the easy profit markets. And why? Because it's actually easier to make money in a market because statistically, the probability is better because you have a growing market. You might get technicals right, you might get the entries, the exits well timed, you might do the support, resistance, even look at the financials. But if you're in a market that's declining, you have that working against you in your probability. You're going to see less of an advantage when you're investing. So today we took up this trade here on TSSI. I want to walk you through how we made over $1,000 profit investing less than $5,000. So let me kind of walk you through how we did this, and then you can kind of see the steps that I took, and then it can help you to be able to repeat some of the results. And I don't really have anything to prove to you guys. If you ever want to take a look at some of our positions on the right, you can see we have over 100% gains on multiple positions over the last 6 months. And we focus on the fastest growing markets in the world. And we've been growing our YouTube channel. We're up over 30,000 subscribers. You could always hit that subscribe button if you would like to stay along. But as you can see, you have the $1,000 profit here, about a 22% increase, 24% increase on a simple 500 share buy. Now, this is from a company that's called TSSI, and really it starts with the people, it starts with the actual company. Before I jump into technicals, I'm always going to jump into the actual company fundamentals first. So that includes, first, the market. Growing market, data centers, as we talked about, but also you have the, not just the cash, but the real world usage. Good example would be NFTs that didn't have good real world usage. With NFTs, you had so many people buying, a lot of money going in, but the real world usage was low. So the market, it collapsed. A lot of NFTs, 95% of them became worthless. And so you want to make sure not only that there's growing in the market, but that there's also real world usage. And there in the data center market, we can verify that. Then the next thing we're going to look at is going to be the financials. The financials include looking at revenues that are increasing. So you can see that back here in 2022, they had revenues of 30 million, but it didn't stop there. They continued to increase to 54 million in 2023, and then 148 million in 2024. And then in 2025, they're on track to reach over $200 million plus. They're already above that, really. So the increase is year over year. You could see that growth, kind of a hockey stick approach. Then you have the balance sheet. Now, at first, looking at a glance in 2024, their liabilities were pretty high. So this is their balance sheet, meaning their assets to their liabilities. And their assets were up here around 96 million, which is pretty high compared to their liabilities around 89 million. It's actually not much equity though. So only about $7 million in equity, meaning if they have to dip into some of their assets or they have a negative quarter, they wouldn't have much cushion. But why we started investing in them here towards the end of 2025 is because in the last quarter, they came out with a decrease in their liabilities. They dropped their total liabilities down to 100 million, and they increased their assets by 145% up to 165. So they basically 4x'd their their assets or 3x, 4x, or 5x from the year previously, actually. And so assets increased and liabilities decreased. So when I saw that gap widening while the revenue was increasing year over year here, we're led to believe that they're growing. So then the second question was, okay, the financials look pretty healthy. If they're doing $200 million a year, they have here about 60 million in equity, or a little bit more than that. So let's say, 260, kind of like positive coming in. Their market cap was at around 200 million. So they were holding much more assets and more income than that of their total valuation of their company. And they're currently at 2999.999. They're on a sale right now, about to hit 300 million. And so they now are getting to levels that are more congruent with the financials. So things are lining up. So that was the financial side. The news side, though, this is interesting. People look at the financials, but they don't look at the news. They don't look at the products. The theory here and the thesis was that more tech companies are looking for the AI computation, and they're looking to deploy the data centers. And this company specializes in exactly that. They actually specialize in building and configuring the inside of the data centers, not the construction of the actual place, the whole shebang, but the nitty-gritty end-to-end data center configuration and integration and deployment. So every time you're looking for a profitable investment, you go through a system of simple questions or just philosophy. Number one thing is obviously going to be, for long-term growth at least, the value that they provide to the marketplace will directly tie to their value of their company later. So the amount of value they become as a stock will always be in direct proportion to the amount of value that they provide to the marketplace. So it's not always financials. You could have companies with lots of money. Look at some of the bank stocks. They got billions and billions, hundreds of billions, but their stock's trading at way less than that. Why is that? Because it doesn't do anybody much good if they're just holding a bunch of money. Yeah, they give out loans, things like that. There's some service in that, of course. But it's the same thing like what do they say? Like, if God gives you the talents and you don't use the talents and you bury them, they're going to go to waste. It's not serving anyone. All you have to do to be successful as a company is to serve others in the best capacity. In fact, if you don't serve, then you lose what you have. It's a scarcity thing. You see banks go through that all the time. And definitely they're getting shook by the crypto stuff that's happening. That's for another video. But with the data center market growing, and then you see them come out with these edge services, liquid cooling, AI builds, integration, deployment, maintenance, new companies need to get online once they build the data centers. This company specializes in exactly that. So on top of that, you've seen some news recently where they're in the AI markets and just really coming out with better earnings. Not any major hype around this stock. I don't think there's much at all. I haven't seen anything. Maybe today they're starting to, nope. Yeah, maybe today, 10 hours ago. But before that, it's like, last release could be, many months ago. So that's good. We don't want a hype stock. Because what goes up very quickly without value, but just hype, will not stay. It's not something that will keep its value. So we want things that we can trade short term, but also hold long term so that we can capitalize on the swings and hold long term to make build value in the portfolio. I have made thousands of dollars doing this exact strategy. So as you can see, all we did is we identified the markets, we identified their use case. Then we saw them trending. Now they were up to $31 a share. And if you would have asked me or any investor that knows what they're doing at this point, they would have said they were way overvalued at $31 a share. No doubt about it. But when they sold back down here into this level here around $6 a share, they were back down to kind of this rising support. they had surged above the moving average, which is a indicator of trend, and the earnings that were coming out were indicating more growth. And so I placed a fair value on them, really of about 350 million to 400 million, which would put them around $12.50. But we waited for them. You can kind of see when we entered here, we waited for them to break up into these levels of recovery around this $9 price point. And once we started to see the $9 price point, then we could enter. We had to ride some volatility. I think we entered around here. We had to ride some volatility, but ultimately we're looking at it and we're looking for a small deployment of capital to earn a hefty return. So that's really just it. Things are going well over here on TSSI, and I wanted to share with you guys how we do it, and hopefully it's helpful for you. If you guys ever want to tune in live, feel free to have a look at the links in the description. There's a second link below for StockMate, and we'll send you a free t-shirt. The last thing that I used to do the analysis was this tool, which is Prophecy AI. And so Prophecy AI essentially uses all of the analysis that I normally go through, and we've integrated it with Grok and OpenAI and Claude and Gemini, which are the top AI models in the world. And we had some projections that we're anticipating the stock would reach up to over $10 a share. We were looking at the insiders, and we saw BlackRock buying and Vanguard buying, and we saw more buys than sells. That's another indicator we used. But ultimately, the AI helped with the decision making. You could see some of the projections into the next 6 months of $12 range to $15 range, which is a 35% increase from here, but it's more like a 65% increase from where we entered. And so, or a 55% increase from where we entered. And so we do see, maybe some corrections in the short term, as you could tell, because they just rallied up. But the longer term looks quite good. And so this is the tool that I use for that. If you want to have a look at it, it's the first link below to take a look at Prophecy AI. So guys, I appreciate you all. Thanks so much for tuning in. Fire your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next one. Take care.